Hey guys, what's going on? Wednesday market breakdown. Bit of a strange one for me, to be honest, because I'm not really feeling 100% today, but today is a day to be very sharp. So I'm going to be doing some sort of other things today to kind of get myself more into the mood, and then when I'm more higher up on my flow state, I'll probably be looking to get involved in the markets. But at the moment, I don't think it's worth it. I did take a small position, but it came out of a place of I don't know where. It was just it was a bad decision. So I closed it pretty early before it could even damage my account. I wouldn't say it's entirely a bad trade. It definitely had the potential, and it probably would have been quite a good winner. But just the positioning, even though it met the criteria of a good trade, it wasn't the type of trade I wanted to take. So hence the reason why I closed it. There is only one potential trade I'll be looking at, and I think that's on GBP yen. I'll be looking for a position, maybe just a sort of flag in this area here. If it shapes up, then perhaps maybe I'll be able to take that to the short. But let's start straight into it. So the DXY, we can see that obviously we've moved up and we've tapped into this sort of override section here, which meets up with this inflection area, and we've scooped, tapped into it, and there's a possibility, there's always been the possibility that we can sell off from here. The only negative compliments is that we haven't really created any larger structures on the way down yet, so there is that possibility. However, we don't have to create it this large. We can create it within here, 1, 2, come back down here, create something over here, and then sell off. That is also a possibility. We can also short-term sell off. There's so many different variations of what can happen, so I wouldn't hold any sort of bias. I think, as I said on the Monday, this is a very neutral area at the moment, and it's very easy to get caught up in loads of trades on US related pairs because of where we are, and it's not anywhere of any major significance. It's just a inflection area, so I wouldn't put too much on the table with this, but we have to be aware that this can also turn into a flag to go to the upside, and then this becomes something in its own merit, and then we have to just understand what's happening here to go to the upside. That would make so much sense as well. So understanding how we correctively squeeze back low, there may be an opportunity for us to go counter positions on US related pairs, Euro USD for example, but we'll have to wait and see. For now, staying more neutral. No point drilling onto the lower time frames. You're just going to start reading through this and being like, okay, that's very corrective, so of course we have to come down. Absolutely not. We don't have to. I think the 4 hour is more than enough of a time frame to be looking at if you want to be drilling in, but personally I would just stick to the daily for now. As we can see on the daily, we are having strong bullish momentum. Let's stay with the trend. The trend is our friend for now until we see something dramatically turn around. If we were going to sell off, I truly believe we would have sold off from that retrace over here and then began our run down, but at the moment we haven't got that. We can usually see that when the market's in a key decisive point, we do begin to just sell off. So we'll know when we want to be in the market and when we don't, and right now is the time where we don't really want to be jumping into loads of trades. JP225, now as we've been forecasting for I think 3 weeks now, 2 to 3 weeks, we can see that we approached it. I was personally always looking for this head and shoulders, understanding that it may not shape up, but at this moment in time we do have it. So there's two things that I'm being very cautious about, because even though we have the left shoulder, head shoulder, or right shoulder's corrective, which I also do like, we don't have to come all the way back up here before we short. Understanding that this little bit of price, in my personal experience, is enough to meet with this. We did have a little push up and a push down, so this can actually just push up a little bit and sell off. So we have to be very, very sharp with these JP related pairs, because we can get sharp movement. We did see the New Zealand pair sell off a little bit sharp as well at the moment, but that's in its own merit. We have to be looking at the JPYs in a whole and seeing what's actually happening. And yes, this could be a middle section for this to come up here, for this to sell off, and then perhaps it will meet within line here. That would be very, very beautiful, but at the same time, the only negative confluence again is, compared to that push down, that sort of pullback is pretty large, and I wouldn't really want to be so favorable for it. So even though it's something that I've been looking for so long, it's not the most favorable sort of position there. A sell off from here would be more than enough in my opinion. Looking at it on the 4 hour, we can see we had a nice little impulsive push up. We have a reversal pattern up here. Is it really enough? Absolutely. You know, if this commits and we get some price down here, we're going to see loads of opportunity on the way down. So there's no point, in my opinion, just jumping into trades right at the top right now, because okay, yes, you might feel like you're protected and stuff, but you can get way better position sizing, stop loss placement, etc. on the way down. So that's what I'm going to be waiting for. I'm going to be staying sharp. This is a very easy area for this to just turn into something else as well. We have to always be aware that this can, you know, turn into something a little bit more complicated. Not saying that this is an angle that we typically trade, but we have to also be aware of it. So that's basically it for the JP225, but it's a very, very important one to be correlating with your Japanese pairs at the moment. So keep that in strong sight, because if that starts to shape up and starts to drop off aggressively, you're going to see similar movement on the Japanese related pairs. And if it hasn't started to drop off on the Japanese related pairs, it's probably gearing up for it. So it's probably trying to tap into a very near, let's go to USD yen quickly, tap into, let's say it's trying to aggressive, like everything else is dropping off aggressively, USD yen is probably just trickling. It's going to tap into an area over here and then aggressively follow. So keep sharp with those. Going into the indices now, this is an interesting one. I didn't take any indice trades this week. I monitored it and followed it very, very well, and it came exactly to what I was looking for. However, I didn't take it because I wasn't comfortable with the position sizing, even though it's something that I'm used to. I think for some reason it's been a while since I've traded one of these pairs, and I didn't want to make a wrong decision, especially with my previous experiences with indices. They've been positive, but the problem is they move very aggressive, and my time schedule's a little bit all over the place at the moment because I'm doing a lot of things. I'm also going to be going to Turkey in a few days, so I can't really afford to not be by the charts a lot of the time, just because I'm trading on relative drawdown at the current moment in time. So I know I shouldn't really be letting that control or dictate the way I'm trading, but I don't want to leave too much on the table with relative drawdown. I'd rather be locking in aggressively and slowly but surely get there, opposed to just being very lenient and then realizing later that, okay, if I was more aggressive, etc., etc. So I have a way of trading, it's working, I'm going to stick to it, just stay consistent with it, and however long it takes, but I know almost indefinitely I'm going to reach the goal. I just have to stay consistent with the way I'm choosing to trade. So over here we hit this value area. We had a near miss to another little inflection point up here, irrelevant. We basically tapped into this. We had a 1 2 3, which was very nice over here, and then we had a push down. So there was more than enough context there for me to look for that short position. And then as we pushed down, we could see that, you know, we trickled, but we didn't quite make it there, which gave me an indication that could this become something larger. But then I really thought about it and I thought, well, looking at how the DXY and everything else is shaping up, there's a strong possibility that this could be a very, very good selling position for the long term. So saw it on the 15-minute, forecasted any flag on the low or below the low from here was good enough for me. We had this tight squeeze flag over here, would have taken it on the phase line break, waited for an extra little confirmation there, and then hovered candled over there. That's the exact trade I would have taken. I would have taken it with 8.5 pips, very aggressive, very tight, and then held it in here. Stop loss placement was around about 2.4. When we dropped to roughly around about 5.5, that's when I moved the stop loss just above here to 4%. And then I was happy with that. If it comes back up, tags it out for 4%, it's a 4% trade. It's perfect. With relative drawdown, I probably would have been at the market by now, I'll be honest with you. I would have only left maybe 0.5 off the table. Perhaps maybe when it came down to 4%, I would have been out the market around about here, 3%-ish. So yeah, I mean, at the end of the day, I mean, if without relative drawdown, for sure, I'd still be in this trade. There's what I'm going to show you. Euro New Zealand, you guys are going to be laughing about that one, honestly. So Going into the Germany 30, also another trade over here. This one I would have been out the market for roughly 3% as well, only due to relative drawdown. But if I was still in this position, I would probably be holding in 50% of this move, which would leave me roughly around about here, and then I would just be managing it slowly along the way. Looking at this on the high time frame, we can see that we tapped into this area here, 1 2, filled the 3, pushed up, pushed back down, aggressive push down, which I like. We had the flag over here, which I also did take as well. No, I didn't take it, sorry. This is where I was looking at the potential head and shoulders. Then when we had the commitment, I was waiting for the flag. I was hoping to have a flag in this area over here. It did come a little bit later, but it was even better because it kind of cleared all of that price. This flag I think is probably one of the best flags I've seen in a while personally. I didn't take it on live capital. I took it on just basically putting it on here, but I would have taken it on live capital if I didn't have relative drawdown. That's the only difference. Also, yeah, so we can see here, and I'd be locking in 2%. It ultimately ran around about 4.4. I'd roughly be in about here, locked in. And then as we kind of push low to these lows, that's when I'll get a little bit more aggressive, and I'll probably pull it in roughly around about 3.5%, and then slowly be trailing my stop loss with structure. If we do get some sort of decent sort of sharp pullback and then a drop off, then I will know where to place my stop loss accordingly. Obviously, we have to understand with these particular pairs, indices, we do get these sharp sell-offs, but then sometimes we consolidate like this, and then we just pull up sharply and come back down. So that's something that you have to also be very, very much aware when you are trading indices. They do tend to have their own different characteristics, but they usually give you some sort of indication before something happens. GBP yen. So this is the one I kind of, let's say, FOMO'd on, really. So essentially we had this. Let's go to the weekly quickly and have another look at this for those who haven't seen this during this week. We basically have this larger area where if you look at it from a higher time frame, it just looks like we're in this middle section of, you know, this whole impulsive move. But when you really drill into it and you look at it on the daily, you can see that there was this small little inflection points where we are moving towards. We kind of just pulled out a lot of liquidity in the market, and there's a lot of accumulation of money in here at the moment. Now, looking at it in line with the JP225, we can't neglect the fact that we haven't tapped into certain inflection points, but we have to understand that if the JP225 starts to sell off aggressively, we're going to see similar price movement across the board with these Japanese yen related pairs. So what I'm currently looking at is this inflection area here, this mini double bottom, nice little scooping area as well. And then we had another little retest to it. Now the thing is, if we were going to sell off, we would have sold off dramatically from here. When we had that nice little 1 2 3 retrace push down, we would have had a very nice little sell momentum here where we did get involved. I did get involved in the market there, and then I was taking out the market somewhere around about here with a 3.7% profit. Whereas we did come back and we've retested it for the third time again. So this retest is not really something that's putting me off. This is something that's kind of saying, okay, cool, we're testing it, let's test it again. And it's being tested multiple times. If price cannot push further, it's going to have no other choice but to sell off. So what we're going to see now is what price can actually do. The most sensible course of action, and hence the reason why when I did take a position here, I believe I do have a position in here. Okay, so the position was taken around about there, and it was closed off roughly around about here. Somewhere around about here. So it was a small accountable loss of a 0.2%, 0.2% off a 1% position. Wasn't something that I wanted to sit in. I think once I kind of just got into the position, once we didn't get any commitment after the hourly close, I looked at it on the 4 hour and I was like, well, to be honest, it looks good on the hourly. Like with the retrace, the 1 2 3, we're at the high, but really and truly, is it really that good of a trade? And then I just convinced myself not to be in it, and it was just one of them moments where I think I just kind of realized even if it did play out and became very profitable, I probably wouldn't have liked the position that much anyway. So This is more for position I'm going to wait for. Solid push out, clearing all of that price, creates continuation, we go to the downside, and then there'll be a nice little run in there. It's more than enough in my opinion, because with that retrace, it was around about 60 pips I took. It was roughly around about 60 pips. And then to the lows, roughly, I was looking at roughly 5% around about here, but you know, to the lows about 7% there. If I can get in with a reduced risk entry somewhere around about here, and I slap it in just about there, okay, it's about 40 pips. Perhaps maybe it'll be a little bit more tight realistically. Even with the risk entry there, I could probably squeeze it in. You know, I could be looking at more of a monstrosity of a trade. 25% on the table there with the reduce. You know, it's probably similar price, yeah, but about roughly around about 13 odd, 10%. You know, on the table there's a lot. And that's only to that low. We have to understand that on the bigger time frame, if we do get commitment and we start selling off, that sort of trade can turn into a big trade, you know. And these are the sort of things that I kind of look at more now than I did before, because if I'm going to put my risk on the table, I want to be looking for the best quality, the best structures, the most confirmation, the best protection. These are the sort of things, and if I can find those trades, they're better, so they're worth waiting for. So when I do take positions like this, those sort of thoughts come and trigger me straight away and say, wouldn't you have been better to, if you were going to take a risky trade, wouldn't you have been better to take a risky trade on something with much better risk reward, not just protection? So those are the sort of questions that is good to ask yourself as well. It's not just about protection, it's about risk reward, it's about placement, it's about structure. There's so many different factors that come into place for a good quality trade. So that's basically it. I'll be honest with you, I don't have anything on watch today. Even though the markets are looking absolutely stunning, really and truly so stunning, I don't have anything on watch. I'm probably not going to take any trades today as well. I'm not really in the most comfortable mindset. My flow state's feeling like a solid 6, I'll be honest with you. So for that reason, I think I'm just feeling a bit hay fevery. I've been in this room for quite a while yesterday, so I kind of want to get some fresh air and do something else. New Zealand yen. Now, as I said, the New Zealand pairs, they really had a nice sell-off. The nice thing about this is we got some commitment, but we're trading back in this structure, and it's a tricky one. There's no continuation pattern as such yet. We're just trickling, which is very, very common, and I wouldn't be surprised if we just kept trickling to the low. Phenomenal little area up here. Not my trade personally, but that little bit of there is what I was keeping my eye on. You know, not very clean over here, right? But we can see if we just line this up, we had this little area, and then you could call it like this, but then you pull it out on the 1 hour and it does stick out a little bit more. But once again, it's not my typical trade. It's not the trade I was looking for. I think on the 5 minute, you could have probably read between the lines and made something out of it, but really and truly have to ask yourself, at what cost was that trade? You know, was that really the trade? Because it's not the easiest one to read. So New Zealand yen did really commit. I was looking for it to kind of complete this a little bit further, but we did get a nice little sell-off there. So, you know, we'll have to wait for a continuation pattern on the way down. USD yen, not yet ready. DXY, going back to that again, you know, we're still hovering in this area here. The hover is quite interesting because we're sitting just around this area, kind of looking like a cup and handle. Don't have any commitment, and like I said, it's just in the middle. So if I go to the USD yen, structurally very nice, you know, very, 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 very nice. However, we don't have any commitment as yet. I'm happy to wait for this one, because if we do get commitment, and let's just say we come up, we push in, we get a flag here, that's great. Another flag down there, great. Then wait down here, another flag down here, great. Abundance of opportunity in itself. So patience is more of a key for me on this one. Even if it does just dramatically sell off, I'll most probably wait for price down here and then get involved in this area here for the short. And that's how I'm looking to take it for that one. Similar situation, CAD Yen, you know, still corrective here. Could we get head and shoulders, push up aggressive, push back down? Maybe. Who knows how long it could take. Japanese 225 is gearing up though. We have to understand that. So these yen pairs, no matter where they're looking, however they're shaping, we have to just understand where it's hovering, and they could just sell off aggressively. You know, they've all broken slightly above these areas, so we're just looking for them short momentums. So that's looking pretty good, to be honest. I think that's it for my watch list. Nothing major there. And then I'm looking at the US 100, also another trade this morning. I did see it kind of break below. I would wait for the reduced risk entry personally. But so we have two bottoms, two tops, not quite. When this top comes in and we get that rejection, you have two options. You could either set your pending order, but I wouldn't probably take the reduced risk now because of the angle. I would wait for this to come up, and if for any particular reason we push up and push back down and even have a little tight flag in there, we could go. The odds are we're probably not going to get that flag. The odds are we're probably going to come up here, tap into this area, and then sell and continue and just sell. That's most probably what's going to happen at this point. However, this is an area you want to stay very sharp in. I mean, I don't know about stop place. I'll be honest with you, I've never taken a US 100 trade ever, I don't think. So roughly probably around about 25 pips on the retrace. I would probably look for it on the hourly as well. So I would stay sharp, but not my typical structure at this point, I'll be honest with you. I think it's just one that I would stay extremely sharp with. But this is the good area. This is the area I'll be looking for the flag. So, you know, we'll just have to wait to see how that shapes up. Yeah, I mean, it depends how you want to look at it. I mean, that's also a strong possibility. You know, these pennants are very, very common on indices. I've noticed a lot. So that's maybe its own pattern in itself. And right now you're in a very good place to be entering the market, to be honest. Even at this point here, you could take that position, protect yourself roughly around about 50 pips. And then we'll see that to the low. I mean, you have a long way going. We're in such a good value area. And then just drops off. Yeah, you know, it could run into a monstrosity of a position as well. Personally, obviously, like I said, I'm not taking any industry trades, but if I was going to take the trade, I would most probably take the trade around about there. I would wait to see how that forms out, if we get a larger structure and so forth, but this is probably the trade. This is probably already good to go now. We just have to wait and see, but I'm not trading it, so I'm not too focused on it. Still waiting for silver. I think silver still has a lot of potential, just needs some time. I'd like to see this as corrective squeeze down. We have the strong possibility of it pushing up, pushing back down, create flag, and we go. That's the trade I'm looking for, honestly. If that goes, that's going to be a phenomenal position, and we could have it to the 90% rule. We could even come all the way down here. Yep, 45. Good position in itself, man. And then even to that point there, you're still looking at a pretty decent position, 30%. So it's looking really nice. USD Swiss, I'll be honest with you, hasn't really been much off of focus this week. Not really done much, just corrective. Still waiting for it to make its way back down. Will it make its way back down? We'll have to wait and see, to be honest. It could just create something a little bit messier before we do anything. But I think there is still that strong possibility. I think even though we have this sort of pull up, could we M-star? Could we pull back up, tap into this inflection point here, and then sell off? Would we tap into this? There's a few variations, but I am still on the short side, but it's probably going to come easily off watch now, I'll be honest with you. Probably not something I can be bothered to really focus on. It hasn't given me what I was looking for, and now it's just becoming its own structure. Looking at Euro New Zealand, phenomenal. Okay, so this is a trade that I spoke about yesterday. It's an unfortunate one, to be honest, because I got this entry over here, which I'll just quickly go to the weekly and we'll just see what's happening. So we can see on the weekly we had the near miss to this section, not the most highest relevancy. We had a nice little retrace candle, but more so interested in after we've had that weekly retrace evening star, we've had this continuation pattern. But the interesting thing about it, and I said it yesterday, or I hope I said it, was we could get impulsive movement straight to the top and then aggressively just keep moving up and fill that gap. As we see on the 4 hour now, we correctively squeezed through the low, mini double bottomed on that low, creating, call it 3 touches, and then we pushed up aggressively, right? Drill into the 1 hour, pulled up, we had the aggressive retrace candle there. Drilling into the lower time frame, we had the 15-minute flag, right? 15-minute flag was more than enough. Now I took it with a 19 pip stop loss, but if you refined it and you looked at it on, you know, the best possible way, there was definitely the room for a 10 pip. Now looking at this right now, that is a big trade. You know, I'd be somewhere out of the market around about here anyway. I wouldn't be too lenient with leaving that much on the table, but that's run around about 40%. That's coming back down now. I'll probably be out of the market 35%, so I'll be out of the market already 35, but 35% for a day's work, honestly, you have to ask yourself that that's a good trade. Obviously for me that would be 17 odd percent, I believe it was. So I took a 19 pip stop loss, roughly around about, yeah, call it around about there. It was 19 pips though, and then it ran around about 20%. Still, that's pretty decent for a trade. I mean, you know, most people takes more than a month to reach them numbers, maybe even 3-4 months for some. So that was good. And then there was another trade backing that up. If we just move that across, we can see that, you know, we had this nice little middle section correction, pushed out, we came out, and then we created that nice separate sort of section. There was this sort of version of things, couldn't really see it that large over here, but then there was also the variation of, does this become its own sort of structure to go lower? There was loads of variations there, but I think the most interesting thing now was we had this little flag squeeze here, and then we just pushed out aggressively. I mean, to be honest, like, these things happen. They, you know, you cannot predict that something like this is going to happen all the time, but these things do happen. So, you know, it just works in the game of probabilities. But that was the trades. I think definitely the possibilities were good there. Yeah, it was a mistrade now, but in the end of the day, I think I'm quite happy with how it played out, because it gives you that extra confidence that you know the way your trading works, and it's just a matter of time until, you know, you actually make more money on it. But phenomenal, absolutely phenomenal. New Zealand Swiss, let's have a little look. New Zealand Swiss as well. I think I did see that there was a little flag over here, just there. Not my typical trade as well. Yeah, I think it's different for everyone. I mean, there was a 1, 2, 3 in this area, and then we didn't quite come back up all the way there. Pushed down, sort of corrected, and then just sold off. I couldn't see the trade, really, I couldn't see the trade. I mean, that one I'll easily take off. I mean, to be honest, if you wanted to take a trade on this, all you would really do now is just wait for, maybe not that big, but wait for something like that, and then you could ride that to that low, and that would be the opportunity of the sell. And that's probably the one that a lot of people are going to be looking for. But for me personally, I think I'm just going to keep it very simple, take a lot of this stuff off watch. But we can see that, you know, there's a lot of opportunity across the board, but don't need to shift my focus too much now. It's just focus on the ones that you know you're going to be taking trades on. And yeah, silver, I do like silver though. You know, we're shorted in the week. I don't think it's needed for me to have all of that. I'm going to focus fully on these yen pairs, see if I can get a good trade on that. If I don't, let's try next week. Euro New Zealand, now we're at the high. It can come down as quick as it came up, but I don't know. I'm going to have to evaluate that slowly. And that's it really. So yeah, it's been a pretty good week. Yeah, it's been a pretty good week, to be fair. Still up. yeah, just kind of thinking about how these are going to really revolve. Just have to kind of see how this pair plays out, but we'll have to wait and see. Continuation patterns to the upside, pull, push down, continuation to the downside. Yeah, we'll have to wait and see. I mean, big trades are coming, but like I said, I'm going to be taking this day off, not feeling 100%. But we'll be back on it. We'll be back on it. Tomorrow will be another video.